Well, more mortgage pain for homeowners ahead of Christmas. They've been hit with an 8th straight interest rate hike. All of the big four banks have now passed on in full, which will come as no surprise to anybody. Joining us live now is the Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris. Mark, so, right, 3.1%, that's the cash rate right now. How much further to go, do you think?
If I read the Reserve Bank Governor's report yesterday properly, and if I look at what the markets are saying, we've probably got at least two more 25 basis point rate rises in February and March next year. Definitely going to be one, kick it off at the beginning of the year, because the December numbers, when they come through in late January about inflation, are definitely going to come and show us that we've got about an 8% inflation rate. So what you would expect to happen is the Reserve Bank goes again.
Right. So, I mean, it's going to be the true test. I mean, because December, people are out spending for Christmas. I mean, regardless of what's happening with the cash rate, people are still going to do what they can. So that's going to bump things up. And the RBA governor would have surely factored that in. And then things will come off right. So it'll be the true test of where we are.
2023 is going to be a difficult year in relation to everything. So it's going to be quite confusing when it comes to the data. It's going to be quite confusing as to the outcomes. And the most difficult part is, when will the rate rises stop relative to inflation? Now, one of the things, there's a big deal here, a big deal in the US at the moment, is rent-driven inflation. So as the rents go up, they drive up inflation numbers. The good part about that is, you know, for every 20% increase in house prices last year, or the year we're in now, I should say, or the year before, I should say, we were getting 2 basis points, or 2 points were being added to inflation. So if you assume house prices are not going up, and in fact they aren't, they're going down, then there's 2% coming out of the inflation numbers. It should go back from 8 to 6%. But we won't start to see that until sometime in 2023. Against that, though, we've got rents pushing inflation back up again, and then we've got all the floods and all the other dramas around price of groceries. So it's going to be a very difficult, confusing year of lots of different levers being pulled and pushed, and as a result of that, we might run the risk of going overboard and pushing the interest rates way too high.
Yeah, and then recession comes into play. But I mean, it's not only is it hitting people who've got those supersized mortgages at the moment, or any mortgages for that matter, but also those without mortgages and may well just be renting. Some of the figures that I was reading yesterday pointed to a 20% rise in rents over the next 12 months. Is that your expectation, Mark?
Maybe not quite as high, but somewhere between 10 and 20%. There is not a city or a region in Australia that hasn't experienced, in the last 12-month run, the highest increases in rental ever. So that includes, from Ballina to Wollongong to Sydney to Melbourne, across the country. So the answer to that is yes. And if we've got a lot more people coming into Australia in terms of immigration and students coming to Australia in 2023, which is the expectation, then all it's going to do is put more pressure on house rental prices. And people have to rent now because they can't afford to buy. People were buying at the beginning of this year because, the cost of paying a mortgage off was not too much different to paying your rent. Now that's just got out of control. The cost of a mortgage is way more expensive than renting. So as a result of that, people are deciding to rent and continue to rent while they save up their deposit. So it's just more and more pressure on the rental stock.
All right, Mark Bouris, good to see you as always. We'll talk to you again next week.